This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Just because we remove the word patient from the statement doesn't mean we're going to be impatient.
The Federal Reserve Chair may have dropped the word patient, but Janet Yellen added something else that sent stocks soaring.
Results delivered, shares of FedEx fall on a disappointing outlook. We'll take you behind the words and numbers and tell why they're not so bad after all.
What's brewing? Starbucks launches a campaign to get people talking about race relations. But does it come at a cost? All that and more tonight on Nightly Business Report for Wednesday, March 18th.
Good evening, everyone, and welcome. Janet Yellen took the stage and stocks took off. The Federal Reserve dropped the words investors have been obsessing over, patient, from its so-called policy statement. Now, that's the explanation and outlook the Fed gives at the end of its monetary meetings. So, will the Fed now become impatient? Well, you just heard her say no. Not so in deciding when to raise interest rates. Quite the contrary, said Chair Yellen. In fact, she said the Fed will remain cautious and focused on economic data, and some of that data, says the Fed, indicate that the pace of economic growth in the U.S. has moderated lately. And that launched stocks like an F-18 off a carrier deck. The Dow Jones Industrial Average rose 227 points to close above 18,000, trading in a 400-point range. NASDAQ gained 45, S&P 500 tacked on 25. Now, the yield on the 10-year bond fell back below 2%. And one of the biggest moves was in the currency market as the dollar slumped and the euro jumped. We got two reports tonight. Bob Pisani on the market's sharp reaction from the New York Stock Exchange. But first, Hampton Pearson has more on what some are calling the Federal Reserve's most important policy decision in years.
Federal Reserve Chair Janet Yellen and fellow monetary policymakers appear ready to open the door to a rate increase later this year, but they also appear to be in no rush to do so.
Just because we remove the word patient from the statement doesn't mean we're going to be impatient.
The Fed chair ruled out a rate hike at the April meeting. Economic data tracking further improvement in the job market and higher inflation appear to be the most sensitive rate hike triggers, but the Fed chair acknowledged slower economic growth and more downward inflation pressure from the strong dollar makes a strong case for waiting.
Just as we don't want to be premature in tightening policy and aborting a recovery that we have worked long and hard to proceed as far as it has, we also don't want to be behind the curve in beginning to tighten, given those lags.
Markets rallied based on the notion a rate increase may be further off than what many traders had assumed.
We could debate June or September, but it's this year. Remember, rates are zero. Our economy got to a zero Fed funds because we had an emergency. The emergency is long since passed. The Fed needs to get rates where they belong.
What we got today was a small step towards what will eventually be the new normal for interest rates. But the exact timing as to when liftoff actually occurs remains anybody's guess. For Nightly Business Report, I'm Hampton Pearson in Washington.
The Fed did it again. The markets were terrified at the prospects that the Fed would remove the patient phrase. The Fed did exactly that, and yet stocks staged one of their biggest rallies of the year. The Dow Industrials, for example, was down almost 150 points going into the Fed meeting at 2 p.m. Eastern time, but in the next hour and a half, it rallied about 400 points. In the bond market, 10-year bond yield saw one of its biggest declines of the year, going from roughly 2.03% to 1.91%. That's huge. With bond yields dropping, interest rate-sensitive sectors that compete for yield rallied dramatically, with gains in utilities and REITs and telecoms and home builders. Hey, wait, I'm not done. Lower rates for longer caused the dollar to drop dramatically, particularly against the euro. As the dollar collapsed, commodities like oil and gold rallied, as did the commodity stocks like energy and metals. What happened? Well, despite Yellen's comments that the Fed could raise at any time, traders believe that the Fed is once again pushing the day of rate hikes farther down the road.
It looks to me as though the markets are reading that dovishness and saying, no rate hike this year. We heard what you said, but no rate hike this year.
Was anybody not loving this? Well, lower rates are not good for banks who make money by borrowing short and lending long. Big banks like Bank of America, Citigroup, and KeyCorp ended down on the day. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Randy Krasner joins us now for more analysis on the Fed. He is a former Fed governor and now a professor of economics at the University of Chicago's Booth School of Business. Welcome back, Randy. Nice to have you here.
Great to be here.
Let's start, first of all, with something I found kind of surprising in the statement and also in the Q&A session, and that is that the Fed chair seems to feel as though the economy has kind of backtracked a little bit. We don't have any inflation, and she's still worried about the labor market and those who want to work more but can't find those jobs. Did that surprise you as well or not?
It didn't surprise me because I think the chair has been fairly clear that we've made progress in the labor market. But if you look at the broader labor market indicators, not just the unemployment rate, and remember they kind of took out the emphasis on the unemployment rate a while ago from the statement, it doesn't look quite as robust. If you look at the number of people who would prefer to be full-time and are only part-time employed, that's over 6 million. If you look at the number of people who haven't looked for a job recently, but have looked sometime in the last year, would like to be employed, that's another 2 million. So there's still a lot of slack in the labor market, I think, as far as the Fed is concerned.
Randy, John Hilsenrath of the Wall Street Journal wrote today that the Fed has opened the door to raising interest rates later this year, but is reluctant to walk through it. Why do you think that is?
Well, I think exactly as you had in the quotation from Janet Yellen. You know, when I was at the Fed and when Janet was at the Fed, we were working long and hard, and certainly they have worked very hard since I left the Fed in 2009 to make sure we didn't have a repeat of the Great Depression. So I think there's a reluctance to move too quickly to try to kind of cut off some of these green shoots before they really take root.
You know, there were those today who said that perhaps the Fed had lost a little credibility because at the last news conference that Ms. Yellen held, she seemed to indicate that rates would go up in the next few meetings. Has she lost some credibility? Because it seems as though she's backtracking on that today.
So I didn't really take that from the previous press conference. I took that it's going to be data dependent, that they're going to see where inflation and growth are. And certainly one of the developments that we've seen is a little bit slower growth or robustness in the economy, and certainly the inflation rate has been moving downwards rather than upwards. Mm-hmm. And the Fed doesn't want deflation to come back.
No, they do not. And so the question then becomes, whether you have the dollar until today moving higher against the euro, you're effectively sort of importing disinflation or deflation, if you want to take it to that. How do you spark inflation, Randy?
So, well, they want to have some inflation, but not a too big a spark.
It's an Alice in Wonderland-ish. No, excuse me. I mean, it's Goldilocks-ish.
It's trying to get the balance just right. So, we're starting to see inflation kind of flat to moving downwards. Certainly, we don't want to see slip into deflation territory. So, they want to see a bit more robustness in the job market that would likely to be leading to greater wage growth. But you don't want that to go too far. And Janet also talked about that. She doesn't want to be behind the curve, that if inflation starts to take off, they haven't moved. So they're trying to get the balance right, but it's really about data and not about particular dates.
There are those who think that the dollar did have a big influence on the Fed, but if central banks around the world are actually easing and the Fed is standing pat, how does that weaken the dollar? It doesn't seem to. Many people think it's going to continue on its upward path.
Well, it depends a lot on what's happening in these other countries, because many of these other countries are now facing deflation. And so they're sort of taking some leaves out of the Fed's playbook from 2008, 2009 to cut rates close to zero, or in some cases even make them negative, to undertake quantitative easing. And I think the Fed realizes that the rest of the world may need the kind of support now that the Fed had given to the U.S. economy in 2008, 2009.
Randy, thank you very much. Pleasure to see you again. Randy Krasner with the University of Chicago's Booth School of Business.
And a case in point of what Randy was just talking about over in Europe, Sweden's central bank slashed its key interest rate deeper into negative territory. The Riksbank also expanded its bond buying program to stem the rise in its currency. Sweden's central bank is just one of several in Europe using unconventional measures to fight low inflation.
The Organization for Economic Cooperation and Development is warning global economies from relying too much on monetary policy to support growth. The OECD's chief economist said over-reliance on central banks could exacerbate risk-taking and endanger the stability of the financial system.
There has been an over-reliance on monetary policy. We understand why the central banks have moved the way they have, or the way they're going to, but they can't be the only policy player. We are looking for stable, medium-term fiscal paths, a sense of certainty about what the fiscal path is going to be. There's been uncertainty about that.
Mann also said the outlook for the world economy has improved, especially in Europe, as oil prices stay low and the euro depreciates.
European Central Bank President Mario Draghi inaugurated the new billion-dollar ECB building in Germany today, but the ceremony was met with protests that erupted into riots as people demonstrated against some of the austerity measures imposed by the ECB. Annette Weisbach has more now from Frankfurt.
What was meant to be a day of glory for Mario Draghi and its team turned out to be his worst nightmare. Serious violent clashes here on the streets in Frankfurt. More than 10,000 people took to the streets here and had serious clashes with the police. They were protesting, of course, against the austerity policy of the ECB, against the fact that many people in the southern periphery live in poverty because of those policies the ECB and the Troika is advocating. Bottom line from the day is that we had more than 80 people injured from the police. Many cars were burning across town, and various parts of the town were essentially blocked by the police. People living and working in Frankfurt were actually asked to stay at home and not to go to their workplace because it was meant to be too dangerous. For Nightly Business Report, Annette Weisbach, Frankfurt.
In the energy market, oil prices made a sharp U-turn after that Federal Reserve policy statement. Earlier in the day, the commodity was lower when inventories showed another massive buildup, hitting record highs for the 10th week in a row. With the dollar tumbling, though, after the policy statement, oil prices rallied, with crude settling up almost 3%. Brent settled up by almost 4.5%.
And in Mexico, that country's finance minister says he sees a sustained slump in oil prices and that the country's public finances will face hurdles in the year ahead. Revenue from state oil company Pemex accounts for about a third of the federal budget. The drop in crude has pushed the currency of the oil exporter to record lows.
Still ahead, FedEx delivers a disappointing outlook, but there's more to the company's earnings report than meets the eye.
Target is reportedly raising the minimum wage for all of its workers to $9 an hour. The move matches similar moves by Walmart, TJX companies as well. As first reported by Dow Jones, the new wages go into effect next month.
FedEx, the world's largest cargo airline, trimmed the top range of its full-year profit forecast, citing the strong dollar. The company is often considered a barometer of economic activity simply because the better the economy, the more goods that are shipped. Shares dropped more than 1% on the weak outlook. But as Morgan Brennan tells us, the report may be better than it looks.
Santa was good to FedEx. The parcel carrier's earnings for the peak holiday season soared more than 50%. Trouncing analysts' expectations. Lower fuel costs, relatively mild weather, and an ongoing restructuring within the Air Express segment all contributed to the strong results. But analysts say the biggest takeaway is that package volumes continue to grow.
E-commerce continues to grow. Worldwide as well as domestic air freight is starting to grow. A very positive outlook on the overall economy.
4% more packages were delivered via FedEx Domestic Express shipping. Ground volumes jumped 7%. On the earnings call, company executives said this was likely the best Christmas peak ever in terms of service for customers. But it wasn't all good news for the shipping giant. Revenue fell short of expectations as fuel surcharges for customers were adjusted lower, and the stronger dollar created a currency headwind. Sending shares lower today, the company also tightened its full-year guidance to a forecast that fell short of Wall Street expectations. Still, analysts remain bullish on the stock, especially in light of strong profit growth.
We continue to be very positive about FedEx despite the drop in price today. It's just a minor adjustment. This is a company that's on pace to grow earnings by 30+% this year. Should be able to grow another 20-something+% next year. Yet it's selling for an at to slightly below market multiple. I don't know anywhere else in the big cap land that I can find 20% earnings growth on top of 30% earnings growth and pay a market or below market multiple for it.
Backlogs at the West Coast ports continue to translate into more freight coming across the Pacific into the United States via FedEx. Now that the holidays are out of the way, experts are keeping an eye on oil and whether it will continue to boost earnings. Also, the success of dimensional weight pricing, a new size plus weight price structure for ground packages that rolled out in January. For Nightly Business Report, I'm Morgan Brennan.
A legal victory for Herbalife is where we begin tonight's market focus. Herbalife won the dismissal of a lawsuit related to claims the company is in an illegal pyramid scheme. The judge said in the decision that shareholders did not show that the maker of weight loss and nutritional products inflated its stock by misrepresenting itself as a legitimate company. Shares popped 12.5% to $38.76. General Mills reported earnings and revenue that beat estimates. Earnings did fall on restructuring charges and as the stronger dollar hurt revenue. The maker of Cheerios also saying it completed its previously announced plan to cut about 800 positions. Shares 1.5% higher. They finished at $52.86. Investors getting a chance to react today to news that Kraft is recalling about 6.5 million boxes of Kraft mac and cheese, 6 million of which are in my kitchen, because some packages contain or possibly contain pieces of metal. The food company has received customer complaints. No injuries, happily, have been reported. To find out more information on the recall, head to NBR.com. Shares of Kraft up slightly today at $61.87.
Microsemi announcing the purchase of Vitesse Semiconductor for almost $400 million. This as other chip makers have also merged, driving consolidation in the industry. Shares of Microsemi were more than 2% higher. Vitesse Semi soared almost 40%, but it is worth noting it is a small cap stock. Williams-Sonoma reporting late results that were in line with consensus, but the retailer gave weak guidance, which it partly blamed on the slowdown at the West Coast ports. It did hike its dividend by 6% to 35 cents a share. Shares were lower initially in after-hours trading. Before the close, the stock was off about 3.5% to $80.96. And Jabil Circuit, which makes phone casings for Apple, reported a 20% rise in quarterly revenue, helped by strong iPhone sales. After the bell, the stock popped initially. Before the close, the stock was up a penny to $22.65.
And coming up, Starbucks takes a bold step into race relations, tying its brand directly to that hot button issue. We'll discuss the risks to business and brand with a top marketing man. Here's a quick look at what to watch tomorrow. As Janet Yellen said today, the Fed's policy needs to be data dependent, and Thursday will bring a fresh read on the jobs market with a weekly jobless claims report. Retail giant Nike will announce its earnings after the market closes, and investors will get a chance to see how Apple performs on its first day trading as a Dow component.
Starbucks is doing more than brewing up coffee. At its annual meeting today, the CEO announced a 2-for-1 stock split and test delivery service. But the initiative that's got everybody talking is its Race Together campaign. The coffee chain is encouraging its baristas to get customers talking about race relations. Shares of Starbucks up 1.5%. The Race Together campaign is designed to stimulate conversation. But is it smart business? Jane Wells reports from Seattle.
Starbucks' dear, dear friend, Jennifer Hudson. Starbucks always puts on a good show for its investors, but this year's annual meeting seemed to show a company less about coffee, more about change.
This meeting is going to be a little bit different because we are going to tackle a subject that is making its rounds throughout America and tearing up so many lives and so many people and so many families.
The subject is race, and Starbucks is hoping to get people talking about it by encouraging baristas to write "Race Together" on coffee cups. The social media backlash was brutal, with tweets like, "Breaking, all Starbucks baristas will serve beverages from atop a high horse." But shareholders, mostly white, who began lining up before dawn, liked the concept.
Starbucks seems to promote, socially progressive things, and I think that's a terrific thing.
I'm kind of mixed on that. I mean, I don't know how baristas are going to have time to have conversations.
Customers outside the very first Starbucks in Seattle were also supportive, mostly.
I think it's a good idea. I don't know how much of a conversation you can have in a short period of time while you're waiting to get your coffee.
Would it make you uncomfortable while you're buying a cup of coffee for someone to want to engage in a conversation about it?
Not really. Depends on if I have the time to engage.
Race, religion, and politics, just you don't touch them topics. Just walk out.
Starbucks made other announcements at the meeting, like a 2-for-1 stock split, a new delivery service rolling out in New York and Seattle later this year, a salute to veterans. But a good portion was set aside to discuss the race initiative, which is voluntary. Workers do not have to do it, though many say they want to.
It's kind of putting into words how I feel about everything.
Baristas like Harrison Deathridge and Tyler Wright are preparing themselves to have a new kind of coffee talk while whipping up lattes.
There's always time to make that, extra effort and to have those conversations. So.
Multitasking. You got the bottom half of your body that's just doing all this stuff, and then your head is thinking. So, I mean,
solving world problems.
Yeah, exactly. Just making coffee and solving problems, day in the life, right?
Starbucks will soon find out if customers drink it up. For Nightly Business Report, Jane Wells, Seattle.
Our guest, Dean Crutchfield, says Starbucks' Race Together campaign is a positive for the brand. He's Senior Vice President at Sterling Brands, a brand consultancy in New York City. Dean, welcome. Good to see you. You say it is a positive for the brand. I'd love to have you explain why. And what do you see as the risks inherent in spurring conversation in their cafes?
Well, I think that successful brands are about having clarity and a true difference in terms of how they, position and communicate themselves in the market and to their customers. And Starbucks has done an amazing thing today, and they knew they would get a lot of negativity from it initially. But what's important is they actually put their best foot forward to tackle a subject where government and institutions have potentially failed. Why not can a commercial enterprise like Starbucks actively target this conversation?
What about the risks, though? As Tyler mentioned, there are risks. I suppose if this is successful and he does get the conversation going, I mean, that's a huge leap forward. But what if that doesn't happen?
Well, I think, do or don't do, there is no try. And this is a very big subject that Starbucks has taken on. But let's think about it. It was one of the first to talk about gay rights and gay marriage. It offered health insurance to its staff. Why not talk about race? I think that's very appropriate. Brands are about who you are, what you do, and why I should believe in you. And this is very perfect or very bang-on Starbucks brand. We get a real sense of their personality. Their product's very relevant. They source from all over the world. And this gives me an extra reason to buy the coffee, but also believe in Starbucks just as a brand.
It might give you an extra reason to buy the coffee, but I can well imagine that it might give some people some pause who don't want to be engaged or evangelized or choose your descriptor there when they're going in basically to buy a latte and get out.
Well, not everybody's going to be talked to by the barista. They're obviously going to kind of suss out whether there might be a potential for a conversation. So I don't think it's going to be constant or consistent. It's going to be happening during the course of a day, but not every customer is going to be asked. Not every customer has to be involved. They might just want to come in and get their coffee and go. That's not going to be a problem. But we're better than a coffee shop to have a discussion about such a hot topic.
Yeah, he says in his statement that he doesn't want to point fingers or place blame. And it's not because we have the answers, but because staying silent is not who we are. And it struck me when we had our afternoon meeting that maybe he's already partly succeeded because it's what everybody's talking about already today.
Look, any publicity is good publicity, and I think for a subject like this, who could really defend someone not tackling this subject that's such a big issue in America right now? I think you would be foolish to poo-poo it. I mean, you might not be into the idea of having a conversation, but I can't see why you would say don't do this. I would be very pushed to find a lot of people that would have that attitude. That's my take.
Are there legal risks here at all, Dean, that you can see that people might feel harassed or singled out because of their race for conversation or engagement?
Well, litigation is a $258 billion market in America, so this is a country that certainly will go after something if they think there's that opportunity. If someone feels that they've been discriminated against or they've been embarrassed, these situations might occur. There might even be moves from some baristas saying that they don't want to be involved. Who knows? But this is a business that's very sophisticated. It knows what it's doing. It has very powerful agency partners. It must have discussed this with its PR. They knew they would get a lot of negativity. You know, failing to prepare is preparing to fail. And here is a case where I believe Starbucks is prepared, it has organized itself, and I do believe this will have a major impact for their brand and their business.
All right, Dean, thank you very much for your viewpoints tonight. We appreciate it. Dean Crutchfield with Sterling Brands.
Also in Seattle, an update on a story we told you about last night. A federal judge has decided not to block part of that city's new minimum wage law. The law raises Seattle's minimum wage to $15 per hour. The increases are phased in more quickly for big companies than small ones. The International Franchise Association argued that a franchise should be considered a small business, not a large one, even though it is part of a bigger network. And that does it for us on Nightly Business Report. I'm Sue Herrera. Thanks for joining us.
And I'm Tyler Matheson. Thanks for me as well. Have a great evening, everybody. We'll see you back here tomorrow night.